Hello everyone, how's it going? I hope that you had an amazing day and a great time with Palantir in the market, no matter where your position currently stands. If you're searching about Palantir and have decided to click on my video, then chances are you're wondering about the same questions that many of us are now asking ourselves. What exactly happened over the past few days and weeks? And is now the bottom? Like, can you scoop the bottom here in order to benefit for a comeback before everybody else? So, as we know, the job market over the past few years has been looking ever more uncertain for many of us. The inflation, on the other hand, has been melting away people's savings in places that used to be deflationary. So, when every single element of certainty is going away, we use this opportunity to remember that we need to take a step back and to start working towards our own financial freedom. And in order to have a financial future, we have to find the growth opportunities of tomorrow and seize them so that we can multiply our capital, increasing the money available for investment later on. Essentially, we need to find the golden goose, and for many, Palantir is exactly it. Over the past few years, Palantir became so much more than just another tech stock, promising us blue sky and increasing market shares in exchange of our own money by diluting the shareholders. It has become a major company that plays the role of the canary down the coal mine and also an indicator of capital requirement for risky ventures. It has enough clout, relationships, and mysteries around it to arouse the market's curiosity and people's tendency to follow trends. It is a company that people would often view equally as the risk appetite of the market alongside Tesla, Apple, or Nvidia. The fact that Palantir may rise and fall with the tidal waves of risk capital is a very useful prediction tool that can make it very important to follow. And in this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio in the current circumstances. Now, before the video continues, I just want to take a moment to thank each and every one of you for coming to my channel and hope that you will enjoy your stay here and to take something new with you with every single one of my content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of the companies I cover. With that being said, I hope you're going to enjoy my analysis, and let's get to it. So, Palantir Technologies has been experiencing some relatively significant price movements recently. So, as of the latest update, the stock price has seen a high of $22.71 and a low of $22.01, just right above the $22 level. The movement from previous trading sessions indicate a certain level of volatilities within the market, all pointing downward, as the expectation has been steadily building up over the past few weeks, and the price had a hard time moving up while the volume traded consistently below the average. Right now, Palantir is showing more signs of stabilization, but of course, this is not considering the news announcement that we recently had, because the current reason of the sell-off is due to the announcement that Palantir's traditional public sector contracts growth has been slowing down over the course of 2023. The market reacted as a result and is still in the process of correcting its expectations, the price actions, and digesting the news. Previously, we identified the resistance level of the $25 ceiling, where the stock really struggled to surpass and are now having even bigger problems in surpassing. The support levels are, all the way between $20 to $23, providing some stability in the price movements. These levels serve as important markets for investors and indicate important areas, price reversals, or continuation. And the short-term trends of Palantir stock appears to be moving sideways with a slight downward tendency, and this trend can be attributed to a decrease in both interest and volume from investors. While the overall trend remains bullish, the weakening momentum suggests a potential shift in the market sentiment. So, Like basically what we're looking at right now is in terms of volume, the stock sees a trading volume that is around 29 million shares a day, peaking around like 40 to 70 million shares when there are major events, with a 30-day average currently around 42 million shares. This data suggests that the decrease of both daily and average trading volume indicate a potential loss of the market interest. Palantir is currently experiencing a period of weakening momentum despite maintaining the bullish trend overall. And the short term price movements do indicate a sideways pattern with a slight downward tendency, which is influenced by the decreasing interest and volume from investors. While the stock faces a resistance at $25 and is finding support at around 22, these levels may fluctuate as the market conditions evolve once again. So, really, the recent price action weakness is probably the combination of the profit taking, the bearish catalyst, the lack of additional catalysts, and the downgrade that some analysts are now displaying given the current market circumstances. So, Palantir has been a stock with significant interest from the retail traders ever since its IPO. Um, the sentiment has been overwhelmingly bullish or bearish depending on which direction the wind is currently blowing, because investors are eager to capitalize on the momentum that is building up, and they build up very quickly. Obviously, its journey in the stock market has been shown to be characterized by like intermittent periods of bullishness or bearishness, depending on in which kind of phase we are on. If we're talking about 2022, then it's an absolute catastrophe. But if we're talking about 2023 and beyond, then things have been looking pretty decent so far. One significant aspect of Palantir's price movement is its correlation with the fundamental and macroeconomic news cycles. What this means is that it'll have more opportunities to see the price actions being reflected on whatever that is happening around the world. It's often observed that the news surrounding the company is closely reflected on the price action, leading to self-fulfilling prophecy scenarios. When the stock is on an upward trajectory, then you're going to see that news cycles are going to be pretty positive. Whereas if it's the other way around, like right now, for instance, if it starts to go towards, say, $20 or even below that, then we're going to see a very different kind of discourse regarding Palantir. And this is because news are generally speaking reactive to not what is happening, but what has already happened. And very often what is happening is not something that they're going to be able to detect. So currently Palantir is having its bullish run, albeit with diminishing momentum and occasional pullbacks. While the stock has shown resilience in recent sessions, the pace of its ascent has definitely slowed, indicating a potential shift in sentiment amongst investors. So there's a growing need for additional catalysts to sustain the bullish momentum and to propel the stock to new heights. Obviously, there will be. The question is, can they actually do that, right? So one of the factors that could influence Palantir's future performance is its status as a large cap stock, with its market cap steadily increasing. Palantir is poised to solidify its position amongst the market leaders. Large cap status often brings increased flows of interest from institutions and a broader investor base, both of which could contribute to further upside potentials. And despite the current bullish outlook, we should always be careful. The price targets that are in range of $30 to $35 do seem a bit plausible, given Palantir's growth potentials, but they're also not really guaranteed, and we don't know what is the timeline that they're gonna be to reach there. It could be a year or two, but it could be 4 to 5 years as well, depending on where do the stock markets point towards. Are we going to have another round of QE? Are we going to have, rate cuts, so on and so forth? So the market dynamics always change very rapidly, and the unforeseen events or market shifts can derail the bullish thesis. So the factors from multiple aspects do suggest an overall bullish outlook. It supports its recent performance, but we gotta stay vigilant about any sort of news such as the one that we had today, and to see how the market reacts to it. Personally, if you tell me over the course of 2023, while every single government around the world is having to cut their budgets, is it the end of the world to see some of them cutting budgets with Palantir? In fact, they're not even cutting budgets per se. They're just slowing the growth of their spending in those areas. Is that, does that mean that it's Armageddon, right? But what I think is of very limited relevance. It's really what the market thinks that's important. So right now we have seen a dip from like $23 to like 22. Is that going to continue tomorrow? You see what I'm saying? Like, and in fact, by the time that you see my video, chances are it's already like 1 or 2 days later. It's also going to be interesting to see whether Palantir will go lower. And if it goes lower, I think that this momentum will probably accelerate in the short term, because we would probably not have seen the bottom if that were the case. All right. So investing in a company, and I really mean investing, not just trading the Palantir shares. But if you're willing to park your money into Palantir, it definitely presents itself with a lot of good opportunities and challenges for those seeking exposure in a relatively novel tech industry or tech subsector in the form of data analytics. So understanding the up and downsides is very important indeed. One of the primary reasons why some investors might be drawn to Palantir is its substantial growth potentials. So it is positioned as a leading player in the data analytics sector, and Palantir operates in a field with immense promise for the future economy. So as businesses increasingly rely on data-driven insights to make decisions and to drive innovations to improve their operations, companies like Palantir are very well positioned to capitalize on this demand. With its expertise in handling and analyzing large volumes of data, Palantir stands to benefit from the growing demand for data-centric solutions across various industries. Now, Palantir's current financial stability is a reassuring factor. Of course it is. And unlike many tech startups that operate at a loss, Palantir operates with its own, with the cash that it can generate with its own operations. And this reduces greatly, in fact, the likelihood for further share dilutions through frequent fundraising efforts and needs, providing investors with a sense of stability and confidence that the company will not play with your money. So another thing is its capacity to really capitalize and to surf on popular trends. Right now, the trend is AI. And through strategic moves and partnerships, it can enhance its visibility and appeal to the market by name-dropping those trends in its operations, in its prospectus. This ability to capture the market sentiment and leverage it to its own advantages further underscores Palantir's potential for growth and success in the long run. Of course, there are risks and there are challenges. There might also be threats. One potential concern for investors is the possibility of legal contingencies regarding the privacy and the data ownership. So, Palantir as a company deals with very sensitive data from various stakeholders. it could face regulatory scrutiny and legal challenges, which may adversely affect its operations and reputations. Any negative developments in this area can significantly impact the investor sentiment and the company's financial performance. Now, the other thing is Palantir really relies on the public sector. In fact, case in point, we just saw it today, right? Maybe it doesn't need the public money to keep paying its own bills, but it needs to show that things are growing. In fact, not just growing, but growing at a faster pace if it doesn't want to see the share price falling behind. So this is like the catch-22 that they're in. If they grow more and more on the public sector, they're going to be increasingly reliant on elements that are outside of their control, but not just their control, that are outside of the like the purely economic logic, right? So if that's the case, then Palantir does leave a significant portion of its own destiny in the hands of others. Now, if government agencies decide to cut back on spending or to shift their vendors or the suppliers, this can really have a major impact on Palantir's bottom line and the growth prospects. So the fact that they have a lot of eggs in this one single basket does not necessarily bode well for many. There's also like the potential for seeing a narrative shifting. For example, a few years ago, a lot of people were talking about fintech. A lot of people were talking about like medical marijuana. But did those companies, survive? Not necessarily. You see what I'm saying? Like, oh, and also like companies like DraftKings and so on. Did they really make it big? I mean, this is a very good question, right? And in fact, asking it is kind of answering it simultaneously. So, could this also happen to AI and Palantir and data analytics? You see what I'm saying? Like, we don't know. We hope that it's not going to happen, but it relies quite a bit on PowerPoint presentations and hype to keep driving the market. So it does offer some significant upsides. It also comes with a lot of inherent risks and its own challenges. So really, we should be careful when we weigh those factors and conduct thorough research before making any investment. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Okay, so with all that being said, what is my opinion on Palantir right now? First of all, let me just reiterate the fact that I still believe that in the long run, Palantir is a great choice. If you believe the relevance of AI, if you believe the relevance and the need for more data analytics, if you believe that in this world of ours, certainly imperfect, right? But it still has powerful government agencies that control certain key aspects of our daily life and economy, then Palantir is a good pick. Now, this is the long run. So, I can almost say, philosophically speaking, is Palantir a good pick? You see what I'm saying? It doesn't mean that you should buy Palantir now, because in the short run, I would recommend you to wait for the bottom to be reached. And when does it, what does it mean to have the bottom reached? Essentially, when it stops falling and has been recovering for some time. In other words, you're not going to catch the bottom of the bottom. Okay? We're not here for that. And that's not exactly something that's sustainable that you can do every single time. So over the next few days, or not over the past few days, but over the next few days, try to follow up with Palantir closely and see whether it has this capacity of attracting new people coming in, or at least to stop the bleeding. Okay, if they can do that, then I would say a good entry point could happen by then. If not, I would still suggest to put it on hold for the time being and wait for a better entry opportunity.